Canada's housing market has been in a tough spot, especially in Toronto and GTA. If you think housing slowdown only hurts the investors, you're missing the bigger story, because one condo project is just not a building, it's a job engine. And when pre-construction sales drop to record lows, as we're seeing it right now, that job engine shuts off. Here's the part that most people don't see. The layoffs don't start when a tower stops building. They start months earlier, when the sales numbers collapse and lenders stop funding. We're seeing it firsthand that already layoffs started. Today I will show you real GTA data, charts, and what it means for jobs, small businesses, and government revenue, and why we got to this point, and how essentially we can come back from it. I will also break down step by step how many people a single project employs, from the first land deal to the final closing. If you work in real estate, construction, lending, architecture, trades, or even marketing, this affects you. Hello everyone, my name is Houtan. I'm a local realtor in Toronto. I worked in pre-construction sales for years. I also have an engineering background and I work on construction sites before. My wife is also an architect who works with firms who work closely with developers. So when I say there are major job losses building up right now, I'm not saying it for clicks. I'm seeing it firsthand in the pipeline, and I'm seeing it in the numbers from my old colleagues who are getting laid off and developers who are shutting their doors. Let's talk about the pre-construction sales collapse. Okay, so this is a report by Altus. I want to just kind of go through it with you so you see what I mean, what I tell you when there's sales are like just dropping. This is up to December, but we're seeing the same thing right now in January. Like, hasn't been any pre-construction sales. So just look at the December sales for single family. We're at like 153. Condominium apartment is 87. Total 240. Today, just December, and about like 5,000 year to date. There's like 20,000 remaining inventory. And just when we look at the current month sales, right, we're seeing like this is on average, 10-year average condominium sales, we've had about 955 sales. So that's like right now in 2025 in December, we sold 87. So this is like almost 90% drop, which is like incredible how slow down it is. When look, 91% drop from 10-year average, right, from December. When we look at year to date, same thing, like single family homes, right, on average, 10-year average, a year on a yearly basis, Toronto and GTA usually sells about 8,741. Right now it's at 324 single family. Condominium on a yearly average about 19,000 sales. In 2025 it was only 2,067. So you can see how significant this lack of sales is. 89% from drop, 89% drop from 10-year average. Like you can see, it's pretty bad, right? Same thing, this is total new homes. Same thing, we're seeing just like super low numbers. The benchmark prices, this is like we're still seeing, obviously the prices are coming down. These are condominium apartment based on the unit size. This is the remaining inventory. Single family has always been lower than condo, but the remaining inventory is spiking up. You know, it went down. It's kind of coming down because the builders are essentially shutting down projects, right? And they're not building anymore. But we're still seeing like about 20,000 remaining inventory that is happening. So you can see, like, as the cancellation starts, right, and we're seeing more cancellation projects, we're gonna have impact on developers team, right? The own developers are gonna have issues. They're not gonna have enough staff, right? When you're canceling projects, then what are you gonna do, right? Like, there's like a marketing agencies also are gonna be impacted, because these projects, in order for it to be sold as a pre-con stage, then you need to have a marketing team to promote it and essentially sell it. So now when there's no projects coming onto the market and they're canceling projects, then you're going to see that these marketing agencies are going to have issues as well. Just looking at this article, right, like the projects that are canceled, right, some of them are shifted to rental construction, purpose-built rental, but a lot of them are just canceled. So year to date, this is for 2025, at least 18 condo buildings totaling 4,040 units have been canceled. Each one of these are creating jobs, right? So 18 condo buildings have been canceled in the Greater Toronto and Hamilton area, right? And then we're seeing that another 20 projects with 4,187 units are either in receivership or on hold, with the high likelihood of cancellation in the near term. So right now, just by itself, you're seeing that potentially there could have been another 8,000 units coming onto the market, creating jobs, and that these are all going to be on hold and not going to be built. Yes, some of them are going back to purpose-built rental, right? We're seeing about like 320 units. They're going back to the purpose-built rental. But overall, like this is just causing a lot of issues, right? Like the slowdown is not about just unbuilt units. The slowdown is also causing problems for Toronto finances. The city expects to collect just 137 million in development charge revenue by the end of the year, a 74% drop from the historic average over the last 10 years. So you're seeing like this is also impacting government revenues, City of Toronto revenues as well, and it's going to impact their finances. It's here it says the lack of funds will likely require the city to defer, prioritize, or cancel planned capital projects needed to support growth. This is from the city's chief financial officers. And then we can also just later on, I'm going to talk about the construction. Employment in Toronto has fallen to 34,600 jobs since late 2023. So again, like we're seeing right now firsthand, projects are getting canceled, the sales have dropped, and like so the question is, why are we seeing collapse in pre-construction sales? This is the big question, right? So I want to slowly a bit quickly touch on this. Well, because the system essentially doesn't work anymore. The way the system works is builders have to sell 70 to 75% of the units before they can get financing for the construction. Therefore, they need to attract investors to buy up these units, because only investors can park their money for 4 to 6 years before the project is built, and then they can usually either rent it out or in some cases they would sell it back onto the market. You cannot expect an end user that wanna like live in and move into the place to plan for the next 4 to 6 years, right? Usually that wouldn't work for them, because then they don't know like what's gonna happen, right? You don't know what's gonna happen to you and to your life. So therefore, it's tailored towards investors, right? And this trend continued for good 12 to 15 years. And a lot of people made a lot of money, including the government. But what happened was the government kept adding fees and taxes to the costs of the developers, and then also market was going up, so everybody was okay. Developers also raised their prices as well, and investors are buying, right? And they made the units smaller and more investment friendly because they wanted to sell it faster to build faster. And this model stopped working since we had the rate hike cycle, and that just killed and the crash the investor sentiment, right? Like nobody wanted to buy anymore because the resale value dropped as well, and what investors paid during pre-con sales wouldn't appraised on closing, and therefore that caused a lot of issues. And overall, just the system, this system of investment lost confidence among investors, and the sentiment changed quickly. And that you can see like what happened right now is just like the sentiment shift, and then now nobody wants to buy a pre-construction because first of all, your monthly cost has gone up, therefore your cash flow is higher, like your cash flow is a lot lower, sorry. So like, you know, you would have to now put before it would be cash flow neutral or cash flow positive, but now because your carrying cost is higher, you have to put $1,000, sometimes $1,500, sometimes $2,000 a month on top of your cost to even be able to like carry the condo. And on top of that, the condo's value is upside down and it's underwater. Therefore, like there's no point for you to even buy these units, right? Like why would you Why would you buy these? Because first of all, you're not making money on a monthly basis, and your down payment in a lot of cases are fully wiped out. It's a pretty like sad situation, to be honest. And now we're here dealing with record low sales, record low housing starts, and record low construction for at least the next 2 to 3 years. This year, still good, but starting next year, we're gonna feel it. I just wanted to kind of like talk to you about that. This is not only in Toronto, this is like a national economic issue, right? I just want to share my screen, and show you an article by StatScan. Have a look at it here. This is just a stat scan, right? So obviously this is a housing economic account for 2024, right? It was released last June, but just wanted to show you the impact of this issue. It says nominal investment in residential dwelling increase whatever 2.5 in 20, resulting in 1% increase, right? This doesn't mean anything, right? I wanna show you this thing. Housing investment associated with over 1.2 million jobs. That's like incredible. Nominal gross domestic product attributed to the production of housing assets total 143 billion in 2024, up from 141 in 2026. There were over 1.2 million jobs associated with the production of housing assets in Canada in 2024. You can see what I mean, right? Just like how significant this slowdown is, and like what it would cause overall nationally to the GDP of Canada, and overall just like the job market and economy. Okay, so I keep talking about jobs, and I will be lost and is losing, and but what are they, right? So I'm gonna map out this for you so you can see exactly what I mean. Think about one single condo project or one single subdivisions, and I'm just going to go through from the beginning to the end and the number of people that it will hire. Step one, land acquisition and deal setup. So you have the land and deal team. So there's a land acquisition brokers, land assembly agents, appraisers, surveyors, title search, real estate lawyers, development lawyers, corporate lawyers, accountants. There's also tax advisors, lenders, underwriters, mortgage brokers, and insurance brokers. That's just at the beginning. These are the number of the jobs that it would create once you do a land deal, like a land assembly deal for a developer. Now let's go. A developer wants to do some due diligence and site works. You're going to have environmental consultants, geotechnical consultants, the geotechnical drilling crews, lab technician, traffic count crews, utility coordination specialist, demolition contractors, relocation, utility relocation crews, and there's also like the securities that a lot of these people hire for vacant building. Okay, so now that was just due diligence. Now let's go into planning and approval. On the planning and design approval, you got the registered planner, urban designer, zoning specialist, policy planners, community engagement consultants. A lot of them are like the planners will do, right? But then you have communication PR teams, visual artists, and 3D renderings. On the legal side, planning law counsel, the OLT support team, transportation, traffic engineers, parking consultants, and then traffic management, demand specialists. On the design and engineering, you got the architect and the design, right? There's like now just the architecture by itself, architecture of record, project architects, technologists, building code consultants, accessibility consultants, interior designer, landscape architect, lighting designers, and like the specific like spec writers, right? On the engineering and technical consultants, you have structural engineers, civil engineers, mechanical engineers, electrical engineers, fire protection engineers, energy modelers, commission advisors, and then you got like this is vertical transportation consultants, like a elevator consultant, right? On the building performance, envelope consultant, building science teams, acoustic consultants, wind study, sun and shadow study team, and noise and vibration. Just you can see like how many jobs are there. Then you got like the environmental engineers, remediation planners, archaeologists, heritage consultants. Step 4 on the pre-construction and pricing. So you got the cost, pricing, and procurement consultants. Again, you got the quantity surveyors who would like do the cost analysis, estimators, cost consultants, schedulers, procurement team, bid coordinator. And then let's just go on like a construction, right? Like just like a typical construction team, like what does it comprise of? General contractors, PM team, site superintendent, site coordinator, health and safety officer, site engineers, payroll and HR, document control, security, site cleaning crews, waste and recycling haulers, temporary power. Then let's go to trades. I mean, it's just too much, right? Like it's crazy. As I'm going through it and I'm explaining this to you, you can just see the impact it's having, right? Site work and foundations, demolition, excavation, shoring, caisson, right? These are all just site work. Then you got the structural, formwork carpenters, post-tension crews, structural steel erection, welders, crane operators, riggers, building envelope, glazing, curtain wall, masonry, insulation, roofing, mechanical, electrical, plumbing, pipe fitters, sprinkler fitter, HVAC, sheet metal, refrigerating mechanics, interior, framing, the drywall, taper, acoustic ceiling, tile, flooring, millwork, countertops. On the exterior, asphalt crew, concrete, curb and sidewalk, landscaping, fencing, testing and commission and closeout. You got the balancing technicians, commission agents, fire alarm verification, sprinkler testing. Step 6, now let's just talk about the suppliers and manufacturers that is one condo project hires. You got the concrete mix plants, aggregate plant supplier, rebar fabricator, steel fabricator, lumber yards, drywall manufacturer and distributor, insulation supplier, roofing supplier, brick and block supplier, glass manufacturer, and sealant and adhesive supplier. On the mechanical equipment, pipe and fitting distributor, valve and pump supplier, boilers, heat pump, fan coil, finishing and fixtures, cabinet, millwork, stone, quartz fabrication, flooring distribution, environmental rental, equipment rental, crane rental, lift rental, shoring, generator rental. On the logistics side, you got trucking firms, dispatch teams, warehousing and cross-dock teams, delivery crews. And then let's go on the sales and marketing and occupancy ecosystem, presentation sales staff, marketing agencies, branding, media buyer, render artists, model suit, photographers, videographers, stagers, real estate agents and brokerages, mortgage brokers, lawyers for closing and warranty team. And then you got the property management, building operation and maintenance, concierge staffing, cleaning contractors, moving companies, telecom, and internet installer. It's incredible, eh? Just like the number of people, just look at this. It's like 4 pages that I put up. Number of people that one condo building hires. Now, when we look at the impact, that was just the impact on the economy, like a private sector, let's call it, right? Now, when we're looking at like the impact that it's gonna have on the government, we already like quickly touched on it, but less construction work means less income across trades and small businesses, right? So they're not gonna pay as much HST, they're not gonna pay as much tax. So there's gonna be less spending in the local economy. Then you have fewer land deals, and fewer closing means less legal work, less financing activity, and less brokerage activities. And don't forget, all these guys, any transaction that happens, you get government revenue. You get the federal government revenue because you have to pay HST, you have to pay income tax, you gotta pay sales tax, you gotta pay overtime, you pay extra tax. So all these taxes that are the government is essentially losing revenue, and on top of that, municipal revenue gets pressured through fewer permits, fewer fees, and less development related inflows. You got the provincial, I mentioned, you got the federal revenue gets pressured through weaker income and business activity tied to housing. And now, besides all these revenue problem, you have the supply problem, return later. Starts falling today means fewer completion later. That pushes affordability pressure into the future. So you get a bad mix of slower growth today and supply constraint later. It doesn't look good overall, right? But there's hoping we can change things around, right? And like what can be changed, right? Like how can we prop up the this pre-construction market? It's hard to tell, right? But obviously, maybe if the financing model changes, like if builders can build more end user friendly model, when the financing situation changes, that you don't have to sell 70-75%. If construction cost comes down, which probably gonna come down, then there's like government fees and levies, right? That could impact. If they reduce the fees and levies that they charge on top of the construction cost, that could bring the cost down, right? Reduce the approval timelines and the risk for the builders. Therefore, they can bring up the projects faster into the market, either whatever, if it is purpose-built rental or condominium. And then to prop up demand, we might need a little bit of a lower interest rate. Our government is talking about potentially bringing foreign investors for pre-con. I know it is a controversial topic for a lot of people. Some people don't like it, but it is one solution, right? To just increase the sales activity so the builders can build. And overall, we need a better economic outlook and better confidence in the market, and so the sentiment can change in this market, and then we can have the investors back into the market, so then we can prop up the housing market again. Yeah, so look, the point of this video is simple. Housing does not only mean home prices. Housing is jobs. When pre-construction sales fall to record lows, the job losses do not stay inside construction. They spread throughout the entire pipeline, and the impact affects everybody, including the government, and it impacts the economy a lot more than people think. But if you work in trades, consulting, lending, development, or real estate, comment below and tell me, what are you seeing right now? Are projects getting delayed and budgets getting cut out and teams getting laid off? And if you want more breakdown video with real charts and data, subscribe and I'll keep covering what is happening in Toronto and the GTA real estate market.